Hello, and welcome to the Simplify Your Retirement Podcast with Stephen Stricklin. Good morning, Stephen.
Good morning, Paul. How you doing?
I am doing very well. I'm excited to be here today.
Okay, well, good. You usually are when we're talking about a topic that lights your fire and
Yes.
something that you know a lot about, so that's great. Yeah. And I am too. I'm always glad to be here too, whether or not it's a topic that just really excites me or not. It's always great to talk to our audience, to talk to the podcast listeners, whether they listen by podcast or by video on YouTube.
Yeah, and it's been a fun season just talking about different types of products, and so again, the focus this season was kind of just non-traditional, right? I mean, because retirement is more than just putting together a plan, more than just someone's retirement assets, that type of thing. Yep. It goes so much beyond that.
Well, it's amazing. It really does. And that's why this is great to have this format.
Yeah.
We teach a class, Simplify Your Retirement. It's a 2-day, 4-hour course. That 2-day, 4-hour course coincides with the book that I wrote, Simplify Your Retirement.
Yep.
But in that book, in that course, we're certainly talking about everything everyone has to know to prepare for a peaceful and enjoyable retirement. But the podcast really is an extension of those things. We couldn't possibly cover all the things in a 2-day, 4-hour class that we could cover, or even in the book that we're allowed to cover in this format like this. So this is great. Yeah. So this, for example, this season we've been able to talk about Bitcoin, digital assets. That was one of the last ones we've done. Talking about once someone retires, having a plan, being prepared emotionally, physically, not just financially. Yeah. All these things that are kind of go beyond retirement planning. There's retirement planning, then there's beyond retirement planning. That's what kind of this season has been all about in today's episode too. Yeah,
and then as a fiduciary too, to be able to address products and things that people hear about, right? Because we know that sometimes we've been in the industry long enough that we've seen all these trends, right? And we've seen unique names and acronyms and all that for something that's been around for ages.
Right.
But it's the new marketing trend and the marketing term, and people hear it on the radio or something. So we would rather be able to educate people to understand how products work, when it might be right for them.
Right.
Because there is no such thing as a bad product.
That's right. Only a bad fit.
That's right.
And then there's the mainstream things. There's the things that everybody needs to have a plan for. Everyone needs to have 3 buckets.
Yep.
Everyone needs to have a liquid plan, income plan, growth plan. There's the main things you have to have in place first. A lot of times, what we're going to talk about today, for example, we talked about recently in Bitcoin, these are things that are important, but they're not the main thing. So in other words, we spend the majority of the time talking to our clients about these are the things you have to get right. There's these little shiny objects. That doesn't mean it's not a bad thing. It's a good thing, but maybe at the right time. And so a lot of things we talk about, it's the right timing. Someone may want to come in and talk about, gold or whatever the case may be. And that may be important. It may be the right thing, but where does it fit? There's some certain things we need to get done first. Do you have a legacy plan for your family? Are your beneficiaries up to, there's a lot of things that have to be done. Then there's things that should be considered.
Yes.
And ultimately, one of the reasons why I like this format too is because, for example, we've talked about reverse mortgages. It's like these things are things we're not going to tell you this is not the mainstream thing, but it is something that may need to be considered.
Yes.
And in the world of financial products that are out there, insurance or investments, there's so many ones that have potential. There's so many quote unquote good ones out there. And whether or not it's good or bad is not based on the investment or the product itself, is what we always teach. It's based on, do you need it? Does it fit in your plan? Where does it fit in your plan? That determines whether it's good or not.
Yeah. And I think one of the keys too to all of this, and again, this format is good for this, but too often people start with the product and then worry about a plan.
Right.
Or they buy a whole bunch of stuff. And then try to make it put it together and say, oh, here's my plan.
Right.
Whereas we say, no, it's the other way around. You start with the plan.
Right.
And products are just a means to an end. They're like the puzzle pieces.
That's right. Solves the problem.
Yeah.
Right, exactly. Well, in today's topic, we were looking at topics for the year, for the season, and one of the things that I've been hearing about a little bit is this thing called short-term care. And I know most of our clients are familiar with long-term care.
Yes,
we address it in every single retirement plan. It's one of the largest financial risks that someone face going into retirement is a potential long-term care stay. We know that over someone who reaches age 65, you have a 70% chance of needing some sort of long-term care services in the future. And so we're always thinking nursing home, assisted living, long-term care. But then there's been this thing I've been hearing about lately, which is short-term care.
Yeah.
And so, a lot of in the context of this podcast and Simplify Retirement, there are certain things that I am, very familiar with, that I know a lot about. And so I'll just talk about it myself, and I'll kind of be the guest lecturer on this. Sometimes if there's a topic out there that I don't know as much about, we'll bring an expert in, bring a guest in on the podcast. And so I was thinking through all the people that I know who've been around the insurance industry for a long time, who know a lot of things about Medicare, long-term care insurance. And one person, kept coming back to the top of my list, and happens to be my co-host right here, Paul Brock.
Yeah.
And so, Paul, how long actually have you been in the insurance industry? I was thinking about this this morning.
In the insurance industry, 21 years.
21 years.
Yeah.
So I think that qualifies you as somebody who has experience.
Yes.
Who knows a thing or two about insurance. And one thing we've always relied on Paul here at our firm, Wise Wealth, is to be our insurance expert, among other things. And that includes, life insurance. And he's done talks at our summer education series on life insurance. We've done talks on long-term care insurance. He's an expert on that. He's actually Medicare licensed and insured. He's our expert on Medicare, and really was the one person I wanted to talk to you about this topic today, which is short-term care. So I guess first I'll just start with, what's the distinction between short-term care and long-term care?
Yeah, and so I think of Sesame Street.
Oh,
the old where you get the little puppet or Muppet, and it's running and it says near and far. I mean, and really, I joke about that, but that's the difference between short-term care and long-term care. So short-term care would be a year or less. Long-term care is anything longer than a year. But both have a place within the medical field as far as how it happens, right? And so we talk about in the class a lot. We'll put out statistics of, 1 in every 2 people who are age 65 or older need some sort of long-term care in their lifetime. And so in that sense, what it's referring to is just help doing things that you can't do on your own every single day. So the 2 out of 6 activities of daily living. Right. Okay. And generally, long-term care can be done in the home. You have someone come in and help you, or it's done in a facility, a long-term care facility. It's the same type of thing for short-term care. It's just that's done on a shorter-term basis.
Okay.
So when we look at the figure of half the people need some sort of long-term care, it includes short-term care. Okay. And on top of that, it's not just that. When you think about the average time in a nursing home, we'll spit out a fact of about 2.8 years. You have to realize there's a lot of people that live a long time there, but the reality of it is about almost half of all the long-term care cases last less than a year.
49%, half of the people who need some sort of long-term care, it's 1 year or less.
Yes.
That's massive. So only half of the people who need long-term care are there longer than a year. And that's an important distinction. That's a major point to make. But also, when we're talking about short-term care, long-term care, we're saying that because that is distinct from medical care.
Yeah.
Right. So in other words, people hear these terms like, what is the difference? In other words, if I'm on Medicare, I'm age 65, I'm on Medicare. What does it matter, since Medicare covers everything?
Yes.
Okay. Since that may be the thought that some people have, I'm on Medicare. Medicare covers everything. Why then does it matter, this definition of short-term care, long-term care? So you want to just explain the difference between medical care and, let's say, skilled care? Yeah.
So when it comes to Medicare, they will cover skilled nursing. Okay. I like to, it's referred to also as rehab. Okay. So the idea would be, let's say that you're out and you're in the lovely snow, you're shoveling your sidewalk, and you think you have it clear. Maybe you put down Ice Bite, but then it warms up and then it refreezes. You step out the next morning, you fall, you break your hip.
Right.
Now you go to the hospital, and when you're done, you have to have rehab. And there are cases where, especially when you get to Medicare age, that you can't just go home and rehab because maybe you have too many flights of stairs. Maybe you don't have someone with you who can help take care of you. Whatever the case may be, you might have to go to a facility for that. You could go home or you could go to a facility. But the rehab or the skilled nursing is, in a sense, you are getting better.
Okay.
You still need help.
Yep.
You may even need 24/7 care, but it's for the sake of getting
Rehab.
better.
Yeah.
Okay, that's where skilled nursing is. But still, because it's done a lot of times in a facility, it gets lumped into the long-term care figures.
Okay.
Long-term care, on the flip side of it, the traditional long-term care that we think about is custodial care. Okay. That's when we've moved beyond we're improving to we just need help maintaining daily life.
Medicare is kind of looking at this saying, are they getting better? Are they rehabbing? Is this medical care or is this something chronic?
Yes. Yeah. And so once it becomes custodial care, Medicare stops.
And custodial care could mean, like you said, that doesn't mean a place.
Yeah.
That means a qualification. So because that could be done in the home, it could be assisted living, it could be a nursing facility.
Yes.
Skilled nursing facility.
Yeah. And so it's all about are you getting better or are you just maintaining life in a sense? But even as skilled nursing, because the point is to get better, there's a cap of 100 days.
Okay.
So they expect
the max Medicare will pay.
Medicare will pay. Yep.
All right. So the whole point of this, discussion really is about payment anyway. Yes, it's about care. It's about getting care, but the distinctions, the definitions matter because who's going to pay?
Yes.
And the whole point is, Medicare will pay for certain things, but if Medicare doesn't pay for it, the clients or that you pay for it personally.
Yep.
So that's why it's important to figure out that distinction. So someone goes to a hospital, they're on Medicare, that's probably going to be covered. But so then when you talk about going from a hospital to a skilled nursing facility, I know there's certain requirements before Medicare will even cover those 100 days.
Yes.
So we automatically assume I go to a nursing home, I go to a skilled nursing facility, Medicare covers me the first 100 days no matter what. Is that true or false?
That is not necessarily true. And so they have a rule in place. Some people refer to it as 3 midnights. It's a 3-day rule. But basically, you have to be admitted to a hospital for 3 days, consecutive days prior to going to a skilled nursing facility for rehab before it will be covered.
Amazing.
And that's admitted.
Admitted.
Yes.
Right. So in other words, if I I'm 67 years old, I have a hospital stay, I'm there for 2 nights, they send me to a skilled nursing facility, I have to pay for that on my own because that wasn't 3 days.
Correct.
Medicare is not going to pay for it.
Medicare will not pay for it.
The pre-qualification is 3 days, 3 nights.
Yeah. And that's the general rule, right? Medicare always has these extra little things where maybe there can be an exception to the rule in this certain case, but for the basic rule is 3 days. You have to be an inpatient.
Then you got transferred to, let's say, another facility. You were there for at least 3 days, inpatient. You're there for 3 days. You get transferred in. Then theoretically, you're still on Medicare.
Yes.
Medicare is going to cover you for that 100 days.
Yes.
After the 100 days, I know that's not the purpose of today's show, is after 100 days, you're definitely on your own.
Yes.
Whether you're on Medicare or not on Medicare,
Correct.
whether they approved it or not. Okay. That's where long-term care coverage comes in.
Yes.
That's where it becomes a massive financial risk to people if they're in there beyond the 100 days. So now let's talk about, these 100 days, let's say, even up to the first year. Someone's on Medicare. Does it matter if they have a Medicare supplement plan?
Yep.
Does it matter if they're on a Medicare Advantage plan as far as qualifying for this short term, the 100 days to be covered?
Yeah. The first person that I think should seriously look at short-term care insurance, right? So transferring the risk of the short-term care exposure that you have to an insurance company, right? The first person that should look at that is someone who has a Medicare Advantage plan. And the reason why is because Medicare Advantage plans are based on networks. Okay. So they have network agreements. There's HMOs, there's PPOs, there's all different types of plans, but they're generally network based. And so places have to sign network agreements to get that pricing, right? It's no different than when we're working, when we have an HMO or a PPO, we're used to working in networks. But if a facility doesn't sign an agreement, they are not necessarily required to treat you. So the rules, when it talks about, even from Medicare's publication on Medicare Advantage plans, when it talks about a PPO, Preferred Provider Organization, it says, can I get health care from any doctor, other healthcare provider, or hospital? Yes, you can also use out-of-network providers for covered services, usually at a higher cost, if the provider agrees to treat you and hasn't opted out of Medicare. But there's that little phrase in there that says, if the provider agrees to treat you.
So if someone has a Medicare Advantage, they have to go to a facility that is in network. Otherwise, but there's not always rooms available. Is that the point? There's not always spots available.
There's not always rooms available, and not all facilities will actually sign network agreements
so
either.
If they don't sign a network agreement, let's say you're on a Medicare Advantage, you get sent to a skilled nursing facility, or the only one available has not signed a network agreement. What does that mean?
That means that they can choose to not treat you. And you will either have to pay if you want to go there. You either pay on your own,
pay out of pocket,
or you have to find a different place to take you.
So someone with a Medicare Advantage plan, if they want to eliminate the risk of not being able to get into a facility that is in network, that signed a network agreement, has an available bed, you're going to pay for those days that you're in there, or you can buy a short-term care policy that would cover that and eliminate that risk. And
I'll say this. So to me, this is probably the biggest Medicare risk that I see in the next 5 to 10 years is skilled nursing. And here's why, because what we're seeing in the industry right now is we're seeing nursing homes that are understaffed. There are good nursing homes that because they're understaffed and can't get the staff they need, they shut down rather than provide subpar care. So you're having a shrinking number of nursing homes in general. You're having an increasing aging population. You're having an increasing number going on Medicare, an increasing number of people going on Medicare Advantage. Less nursing homes, less network agreements, more people who are going to need care.
So it sounds like the issue is the quality of care. That's the risk you're talking about. You think in the future that's going to be a problem. This is a
quality of care, but then just also access to care.
Access to care.
Right? Because those who can pay will get the care first. And if they don't sign a network agreement, you may or may not get care. So to give you an example, the flip side of it is you have traditional Medicare, who's primary, and then you have a secondary, so like a supplement. So we have there was someone that I was visiting with that was in the hospital. And so this is actually very common too. People think, well, I'm not going to fall and break my hip. Here's what happened to them. They simply got an infection. And they got an infection which impacted their breathing ability. Right. And so we've seen that, especially with COVID over the last few years, a lot more breathing related infections. They had an infection with that. It wasn't pneumonia, but something similar. And they were going to need rehab because they simply lost the functioning, capability of their lungs that they needed. And so they were going to need rehab. I was in the room when the caseworker came in, and the caseworker, given permission to talk in front of me, she said to the patient, she said, when I saw that you had Medicare, because she had Medicare and a supplement, when I saw that you had Medicare and not Medicare Advantage, I wanted to come in and give you a hug because you are going to need rehab on the backside of this stay. And she said, if you had a Medicare Advantage, I can't guarantee I could have got you in anywhere. But because you have Medicare, I'm going to give you the list of places. You give me your top 3 and I'll get you in.
That's amazing. And I know we've had podcast episodes in the past about Medicare itself, the difference between a Medicare Advantage and being on Medicare with a supplement. So now you're talking about someone who's on Medicare with a supplement, not an Advantage plan, because then they can go to technically any skilled nursing facility that has a room available. It doesn't have to be a network. They don't have to sign a network agreement.
Not a network agreement. They still have to contract with Medicare, but pretty much every nursing home does that.
Okay.
Yes.
So, but they don't have to have one of these. It's not like a specific place. You can almost choose where you get the care as long as they have rooms available.
Yep, because they see Medicare as the primary payer.
Okay. So that's one reason. That's one of the reasons to consider Medicare with a supplement rather than getting one on Medicare Advantage.
Yeah.
More opportunities, more places available to have skilled nursing care that would be covered.
Yes.
Now, again, whether you're on the Medicare with a supplement or Medicare Advantage, you still required 3 days.
Still required 3 days. And so that is a risk even if you have a Medicare supplement. So a second person who might look at short-term care would be someone with a Medicare supplement to say, I don't want to have to worry about that 3-day rule.
Okay. So there you go. So another reason to consider short-term care coverage is I have a Medicare, I've got a supplement, I can go to any skilled nursing facility as long as they have rooms available. So I really don't need to worry about the 100 days, but it's whether or not how you enter into that facility, that's the risk.
Yes.
So again, like you just alluded to earlier, all insurance is transferring the risk. I can either say, you know what, that's fine. I'll pay the $300 a day or whatever the cost may be while I'm in there, or I'm going to transfer that risk to an insurance company. That way I just don't have to even worry about this. All right, that's great. So you have short-term care. You either go, you have a Medicare supplement, Medicare with a supplement, or you have Medicare Advantage. There's still a potential for a short-term care or an expense in that first 90 to 100 days. And then, so I guess who are the types of people that should consider a short-term care policy? And again, to make sure that we all understand, we all understand long-term care. I buy a long-term care insurance policy. Typically, there's a 90-day elimination period, 100 days. The first 100 days is on you. And the idea is you're on Medicare, you enter the facility that's approved. It's after 3 days. Medicare is going to cover the first 90 to 100 days. Therefore, you don't have any out-of-pocket. But then your long-term care comes in to cover you after 100 days. So, but if someone doesn't have long-term care, or they do have long-term care insurance, who should consider? Who are the prime people that might want to consider a short-term care policy? Yep.
So as far as short-term care policies, so again, we've already talked about it to a little bit, scratch the surface of Medicare. So someone on Medicare may look at it. Specifically, those who have a Medicare Advantage plan should look at it, should take a serious look at it. Those who have a supplement could take a look at it. It would make sense. There are places for that. Okay. Outside of just the Medicare concern, it could be someone who has long-term care. Because like in your instance where you said, Medicare might cover the first 90 to 100 days in a nursing home, that's assuming that you're going to long-term care facility for long-term care on the backside of a hospital stay and a rehab that doesn't work. Right. Yeah. So that's not always the case for people who go into a long-term care scenario.
Right.
They have gotten weaker over time, whatever it is, and now they need 24/7 care, so they go straight to a nursing home.
Right.
Medicare's not covering that because that's not on the backside of a stay, and it's not for the sake of getting better.
Right.
It's custodial care.
Yeah.
So you may still have your 90-day elimination period. Short-term care is customizable, and it generally runs from 90 days to 1 year. Okay. That's kind of the time frame that it covers. 90 days to 1 year.
So, but you could buy. Okay, I was going to say you can buy a 90-day policy only because you have long-term care.
Yes.
Or if you don't have long-term care, you can say I'm going to buy at least 1 year. Half the people in there 1 year or less.
Yep.
So I could buy a 1 year policy only.
Yep. And so someone who has traditional long-term care already might buy a short-term care policy to match their elimination period.
Yeah.
Right? Rather than setting aside 3 months of expenses, you're buying insurance to cover that. And so you're just spreading out that risk. And then hoping you
meet these rules of the 3 days, all that kind of stuff. So you literally eliminate any of that risk or any out-of-pocket exposure if you have that coverage 90 days.
So that's one person with traditional long-term care. Yeah. With traditional long-term care, because those who have it already, we see costs going up, or those who are looking at it, we see costs going up. Some of the cost obviously is related to how much they're going to cover.
Yeah.
So if you can stack a short-term care policy with a long-term care policy, you can extend that elimination period to maybe 180 days,
right,
or 1 year,
absolutely,
and reduce your long-term care insurance
That's
cost.
Huge. That's huge.
By covering it with short-term care.
Exactly.
So it may be a combination. Right. It may give you flexibility if you have traditional long-term care, or if you're looking at buying it, doing a combo policy.
Exactly. So we know with insurance, the higher the deductible, the lower the premiums.
Yes.
In long-term care, in short-term care, basically, the longer the elimination period, the longer the number of days you're willing to cover yourself, the less expensive the premiums are.
Yep.
So if you had a short-term care policy, like you're saying, someone bought it for 1 full year, they could raise the elimination period in their long-term care policy to a year. And that would really drastically, probably in most cases, lower the premiums.
Yeah. People always laugh because I get excited about insurance. But what I love about insurance is how customizable it is, though.
Right.
It really is. And so, and for every person, it's going to be different.
Yeah.
So for one person, it might be a short-term care policy that covers 6 months and a 6-month elimination on a long-term care policy.
Right.
That's the sweet spot for them. For someone else, it might be 90 and 90. Yeah. Right. It might be, 9 months and 9 months. It's going to depend on a lot of different factors. Yeah.
So, a lot of times we talk to people about long-term care. Again, we talk to everybody about long-term care.
Yes.
And the reason we do, I'm a financial planner, we look at it's one of the largest financial risk. If you do stay in the averages 3 years, it could be over $200,000 out of pocket. It's a massive financial risk going into retirement. And so, but a lot of times we talk to people, Paul, and they'll say it's too late.
It's too late.
In other words, I wish I bought this when I was 50, 55, 60. Not now. I'm 75 years old. I'm priced out of long-term care. Is that person still a candidate for short-term care?
Yeah. So age, and here's the really fun part, even health are not as critical a factor when it comes to short-term care.
Yeah, I've heard, it's possible to be declined for long-term care.
Yes.
But get short-term care.
Yeah. And so it depends on the policy. Again, it's customizable. Some have more questions, right? The more comprehensive a policy is, the more it covers, the more things it does, the more underwriting there is. But there are some that are very stripped down, and it might be 4 knockout questions, and that's it.
Okay.
So there are people who cannot get traditional long-term care that can qualify for short-term care from an underwriting standpoint.
Is there a max age? Do you know of, or
there are some? I mean, you can go to 75 to 80. I think I've seen some at even 80. Okay. Again, does it make sense at that point? That's a whole nother question, right? Gotcha. But the age shouldn't be a limiting factor to at least explore. Does it make sense? Okay. And health shouldn't be a limiting factor just to explore if it makes sense.
So for some people who said, they've looked at it, they don't qualify for long-term care, this doesn't mean this is a dead end. This could be a possibility still for short-term care. Someone who waited too long, they got a quote for long-term care insurance, and their jaw dropped, and it was like, this is outrageous.
Yeah.
They may be able to look at short-term care, it's going to be a lot less expensive, and it still covers potentially 90 days to 1 full year.
Yeah.
Who else do you think it's good for?
So there's kind of one other big class of people that might look at this, and this would be single ladies. Okay. And the reason why is because short-term care generally, for most of the policies, are simply based on age, and they don't take gender and longevity of gender and the normal tables that are looked at for longevity into account. Okay. So if you're buying traditional long-term care insurance, it costs more for ladies than it does for guys.
Right.
Why? Because ladies live longer. The longer you live, the more likely you are to need care.
Right.
So it costs more for a lady with traditional long-term care. But because it's more just about age and not necessarily gender, you get better pricing for ladies a lot of times with short-term care.
Well, and that's great. A lot of times we've seen that the cost for care for a female, maybe in long-term care insurance, is a little more expensive. So you mentioned that the underwriting requirements are obviously not as stringent. I'm looking at a couple different applications here. Yeah. One of them is 4 questions only.
Yep.
That's it. One of them is 5 questions. Again, one of the 5 questions has A through H. You have to really simple,
yes.
but it's still the number of questions.
Yes.
But generally speaking, what are the things that you'll either qualify or disqualify someone for this? In other words, is there somebody who might be listening to this or know somebody who may be interested in this that probably still would not qualify? What are they kind of looking for, not looking for in a policy like this?
Yes, hospitalizations, right? Because that's a concern, because obviously if you're using it to cover potentially skilled nursing on the backside of hospitalization. So a certain number of hospitalizations that can be based on the plan in recent history would be a flag that might say you might not get it right now. But that's something that you may be able to wait a year and qualify for. The other, the biggest thing obviously is if you're currently can't do 2 out of the 6 ADLs and you need custodial care.
Yeah. If you're already there. Right?
If you're already there, you're probably not going to qualify for even short-term care insurance. Why? Because the likelihood of them paying out is so high.
Okay. And I know sometimes they'll do like in a long-term care application, they'll get a phone call from the underwriter. They'll kind of do a member test or anything like this in a short-term care.
There can be. So again, that's where it's so customizable. Okay. And that's where it's more so the conversation around should we explore short-term care insurance, because short-term care insurance is very customizable. Yeah. Some are very stripped down. It's simply, if I need care, I get a cash benefit, but that's about it.
Okay.
The more detailed they get, they might even pay for a family member to help give you care. They have inflation protection on the policies, and they offer cash benefits for this, and they offer cash benefits for that. And so there's a lot of times where the more benefits you get, the more qualifications there are.
So when it comes to short-term care, if someone's interested in this, learning more about this, may want to explore this possibility, is this something that you do in the insurance team here at Wise Wealth?
Absolutely. So it just starts with the call. Let's have a conversation, like with everything that we do here, right? We always talk about, if you have questions, if you want to explore a topic, give us a call here at the office, 816-246-9473, and ask to talk to someone about short-term care insurance, and they'll set up an appointment for us to be able to talk through that. Yeah. And that's where we can really dive in and say, what are we looking to cover and how are we looking to do it? And let's figure out what's best for you.
Kind of my role here in the team and the firm is we're looking to grow. You got to have somebody in the team who's looking at not losing. And that's what an insurance specialist does. They look at what's the risk, and let's make sure we eliminate the things that could really take us down. And so that's why it's great to have you here on the team, looking at all the insurance. You've led the insurance division of this firm ever since 2010, led the financial advisor team in making sure they understand all these types of products. Because most times financial advisors like me, we're focused on all the investments, all the all opportunities, all the ways to grow, not necessarily looking at, at the same time.
Yeah, and even last season, go back to last season, if you haven't watched it, season 5, we talk a lot about the different areas of planning that we cover, and there's 6 primary areas, and one of them is insurance planning, right? Because there's a place for it. When we talk about financial peace comes from having a plan, I will say that the insurance side of the plan provides a lot of peace for people.
It really does. When it comes to, as you get closer to retirement, it's like the reliability of income. It's the risk of not losing money. That becomes more valuable. Yeah. I do believe that over time. And that's where one of these things is, and we can get into a whole nother thing, this idea of a paradigm shift. What got you here may not be what gets you there. What gave you peace of mind, what caused you to have the ability to make work optional. There's some things that you need to do now that you have some wealth, now that you have some assets, now that you're able to retire, to say, yes, we need to keep growing, but we also can just eliminate a lot of the things that could wipe us out financially. If we're able to do that, why not do that? And that's really where this whole idea of, peace of mind and sleep insurance and all these things, all the things that could happen to us, we have a plan for it or we've transferred that risk.
Yep.
That's massive. And so Paul is the insurance expert. It really has been doing it for over 20 something years. If you have questions on short-term care, long-term care, Medicare, I would just simply either type the word Medicare, short-term care, like we talked about today, send an email to info@wisewealth.com. Paul will get to it, or we'll give it to somebody on our team to get back to you. I'll give it back to you.
Yeah, absolutely. Yeah. Well, it's a great topic to be able to do. Yep. And again, as you're thinking through this, as you're sharing, as you're digesting this information for yourself, certainly don't just sit there and say, well, that was great. Figure out what to do with it. I believe that everyone should have a short-term care plan. Not necessarily short-term care insurance, but they should have a plan. Right. And that plan comes in the context of a overall financial plan. And so let's have that conversation, reach out, and we'd be glad to help you. So thank you, Stephen, again, for the podcast, for the investment of time and everything into not just Wise Wealth, but this podcast, for education, ongoing education for you, our listening audience. If you haven't already, click that little bell icon there on YouTube or whatever platform you're listening to. Click like, click subscribe, whatever it is. It will notify you when new episodes come out like this. It also makes it easier to share this information with someone that you know could use the information as well. That's it. This is for you. You are the reason that we do this, and we wouldn't be here without you. So from all of us here at Wise Wealth, thank you. Thank you for watching, for listening, for subscribing, for sharing this information. We look forward to being able to help you, give you peace of mind, because, as always, we want you to remember that financial peace comes with having a plan. And we'll see you next time.